Welcome everybody to another episode of the Scottish Property Podcast. How are you doing, Stephen Clark?
Good, thanks, Nick. I'm looking forward to today's interview. It's something that will probably bore a lot of people because it's the conveyancing process in Scotland, but I find that stuff that you should know as an investor. You don't need to be an expert on it or know it in detail, but it's stuff that you gloss over and just let your solicitor do. But I think it's really important to actually understand the details of this, isn't it?
It's not the sexy stuff, that's for sure. But I've got Gerald Segal he's associate solicitor at MOV 8 Estate Agents, and he's been about the game a long time. He's got a lot of experience, and he basically talks us through all the basic stuff because we get quite a lot of questions on the group and from other people who are looking to invest in Scotland from out with Scotland who don't really understand the kind of conveyancing process and how it all works. So I think it's really good to get a kind of grounding and an understanding so you know exactly what to look out for and the possible pitfalls, and just really give yourself an education on the kind of legal process of buying and selling property.
And Gerald definitely did. He broke it down really in simple terms and layman's terms, which is easy for everyone to understand, which I think people will appreciate.
Great stuff. So we'll cut to the interview with Gerald. Welcome, Gerald Segal, to show. He's associate solicitor at MOV 8 Estate Agents. So welcome to the Scottish Property Podcast, Gerald. How are you?
I'm very well, thank you. Good morning, and thank you for having me on.
Thank you for joining us.
And hopefully I can kind of give some of my knowledge that I've built up over the last, oh goodness, that would be 15 years now that I've been practicing.
You look pretty fresh-faced, mate, so
I'll pay you later, Nick, don't worry.
Right, so what we want to try and kind of unpick today is, the Scottish conveyancing system for investors and buyers and sellers, and a little bit of background how it works and the stages and the processes. We're going to keep it fairly basic because we've got a lot of people who are just starting out in their property investing journey, and we've got a lot of people who listen to the show from England and further afield abroad as well. So we'll just kind of start right at the beginning, Gerald. And what does the word conveyancing actually mean?
So it's really simple. I think we'd make it sound as more fancy than it actually is, but conveyancing is basically the legal process of transferring ownership from the current owner to whoever's buying it. It's literally as simple as that. There's nothing more complex. So obviously the kind of process of it is slightly more complex, but actually just the meaning of it is as simple as that.
So it's the transacting of property.
I'm really going to enjoy this interview. Because you know what it's like, solicitors do make it sound like a mystical process, but I think you're going to just cut to the chase, Gerald, and keep this nice and brief. So that was good.
Stephen, you've learned something already. You didn't even know what that word meant, so that's good. That's good stuff.
Absolutely, I'm loving this. I'm going to sit quiet the whole interview and just take notes and just really what I should understand. Gerald's going to educate me.
Don't worry, I go into a wee bit more detail when we get into the actual
process. Sorry, Nick, I interrupted you there.
Into the nitty-gritty later on, but we're just starting off giving people a kind of broad brush. So how long's the process? Let's give people a kind of a case study then. From start to finish. If you were to go and buy a property in Scotland, a little bit about the kind of length in the process.
Well, for length, I get asked this all the time, and it can vary from as little as 2 weeks to, well, at the moment, I would normally say 2 to 6 weeks. But with everything that's going on, especially when it's a mortgage, it could be 2 to 12 weeks, depending on if someone's a cash buyer, you can absolutely turn it around in 2 weeks' time, but that depends on the circumstances. If the seller's title deed is registered in Register of Scotland, I can get that online within 5 minutes, so I can get a copy of that. There's no alteration documentation. If it's a nice, simple transaction, cash buyer, property's lying empty, there's nothing complex, it can be done within 2 weeks.
And that can obviously play to your advantage. If you're a cash buyer, then that's a bit of leverage you've got there in a busy market at the moment where it's difficult to get deals. As an investor, if you go in as a cash buyer and you can say to the seller, look, I can complete here within 2 weeks, then you've got some people say you've got a little bit of a better chance, but
I would say now you've got a much better chance, especially with, as I was saying, you normally, if you went to this time last year, mortgages were kind of offered and issued within 6 weeks, but just the demand there is out there, there's people on furlough just now. Mortgage applications are taking for absolutely ever. So I would say, especially now, if you're a cash buyer, that is definitely puts you ahead of the game. I would say people ask me about, should it be a solicitor that puts an offer in we need to put the written offer in. There's absolutely no doubt the solicitor needs to do the written one. But see, if you're doing verbal offers, see if you're at a viewing, there's absolutely no harm in saying, especially if it's the actual owner, which, well, if you're doing viewings, that is. But if you know the owner and you're going to be a cash buyer, you just say what your offer is. They might turn around and tell you, no, my estate agent has told me it needs to be through the solicitor, then that's fine. But there is no harm in asking that question.
That was going to be one of my questions, because obviously, we're out kind of looking at property all the time, and some weeks you could be, I don't know, viewing as many as maybe 20 properties in a week or something. And obviously, when it comes to the point of offering, you don't want to really be like bothering your solicitor with having to put in 20 notes of interest or 20 offers. So like you said, an email to the agent probably first of all, just to sort of sound it out.
The preference for solicitors is that definitely an investor comes to us and says, you've had an offer accepted at whatever level that is, and then we go ahead and just issue the written offer. What I get asked a lot about with going straight to estate agents, what investors especially want to do is build up a relationship with the estate agents. What you don't want to be doing as an investor is putting in 20, 30 offers that are like maybe 20, 30K below home report. If you're firing them in all the time, you will get a bit of a reputation with estate agents, and quite rightly, they'll get annoyed, especially in this current market. So there's absolutely no point in doing that. But if you're going in with a sensible offer, you can do that straight to the estate agent. If there's not any other notes of interest, which again is a wee bit unlikely, the way the market is, but if there's no one else interested and you're going in with a sensible offer, then they will take that to the seller and will say, this is actually quite a good offer. And what you want to actually be doing is building up relationship with sales so that they're actually coming to you with a property that's maybe needs the refurb, isn't going to sell that well in the open market, but they go, oh, Nick's offered before, but he's not been taking, excuse the French, the piss with offers before. So Nick, are you interested in this property? And you get it before. And that is your ideal scenario.
Or if the property's fallen through maybe as well, you could be the first one to get that call,
It's, yeah, absolutely. There's actually not that much of that going on at the moment. I would say only a little. The problem is what we're finding is if there's a mortgage application, it's actually taking so long to find out if your offer is accepted. So you'll find this will come over the next couple of months or so. And also depending on what gets announced tomorrow, certainly it looks as if the market's going to be buoyant for the next 3 months or so at least. We can maybe talk about that a wee bit.
We'll get onto that later.
Yeah,
so that was the cash buy. So that can be like quick, 2 weeks
quick.
If everything goes straightforward. What about obviously if you have to get the buy-to-let mortgage sort of thing? What's the kind of average time scale for that?
Oh, so again, it depends on the lenders as well. See if it's like the ones that are hooked up for investors, they can be pretty quick. But see if it's like your RBS that you're doing it with, it's taking a while. It is, do not expect if you're going subject to mortgage that it's going to happen anytime soon. But that means you still do the whole process. So what you do, if you've got your offer accepted verbally, you put in the offer, get in touch with your solicitor, they'll put in the written offer. And one of the things you put in an offer is really, almost like a page and a half. In the offer, you will have, the main thing is obviously the price. You'll have the date of entry. You can put a specific date if you want, but normally with investors, it's a date to be mutually agreed in writing. It'll make reference to Scottish Standard clauses. These are clauses that most solicitors have agreed to. When you go back to when I was a trainee many moons ago, each firm had their own style offer. It went for 40 clauses. Then each firm had their own response to it, which was 30 clauses. It turns into almost a commercial contract. So these standard clauses is meant to simplify that. The offer then goes on to any fixtures and fittings that you want. You tend to find investments, you just want it completely empty. But then you'll say it's subject to mortgage, subject to if there's any damp surveys or anything, if you looked at the home report and there's stuff like that. You put that in, subject to mortgage, and you submit it. and that goes to the estate agent first. Then the estate agent, if that's been accepted, will pass it on to the seller's solicitor, and then that will kick off the main conveyancing process.
Okay. Can you talk us through a couple of these, the standard clauses, like the main clauses that we've read?
Yeah, no problem. So the standard clauses, they go, I think they're now up to 30 clauses, and it covers everything from like breach of contract, the fixtures and fittings that are to be put in. It talks about all the reports that have to be provided. It's the obligations on the seller and the purchaser. The theory is that all solicitors have accepted those clauses so people don't mess around. But what you find is that when you submit your offer and the seller solicitors, they basically give you a formal response back. They'll come back, and normally you find they'll delete some of those standard clauses, even though they don't need to be deleted. So my favorite ones are, there's a clause in there about incorporated bodies, if the seller's an incorporated body. So if the seller was Nick himself, there is no need to delete that clause because it just doesn't apply. And the other favorite one is there's a crofting clause in there. But what happens is that if Nick's buying in Glasgow, if the solicitor come back, we'll delete that clause, even though, well, crofting obviously doesn't really apply in Glasgow. So it just doesn't really make sense. You can literally leave these clauses alone. And if it's in Glasgow, crofting applies, so you don't have to do anything with it. So thankfully, most solicitors are quite good at it, but that won't really involve the investor. That's more the solicitor's job, who will decide. It depends. I normally, if it's incorporated bodies or if crofting, I'll just go, do you know what? If you've deleted it, you've deleted it, fine. But it can make the process a wee bit more complex from a solicitor's point of view, not from the investors.
We were talking a wee bit there about obviously the ways of purchasing. So you've got the cash, standard traditional mortgage, and also there's quite a lot of people now doing this kind of, private lending from people who have got cash. So I guess my question is, do you deal with any of that? And what have you got? How is it any different? And what have you got to do to kind of set that one up?
So the private lending, there's lots of that going on. Now, my advice is probably slightly different for who I'm acting for on that side. If I'm acting for the person that's giving the money, is lending the money as a private investor, I will always say you need a minute of agreement in place, and you always need a first ranking security over a property. So if there is...
Can we just explain to people about that first security? So that would be like the first charge on the property. Yeah. So
the way it would work normally, if you say if we go back a step and you're just buying a property with a mortgage, once you complete the transaction, what happens is you grant a security in favor of the lender, say RBS. So they are granted what's known at that point as a first ranking security. When you're doing private lending and you're the person that's been given the money, is you want that same security that an RBS would get. The problem that I find is that if the property's already got a mortgage over it, if someone's wants an extra bit of finance and there's a mortgage on, there's an RBS, if you are granted another security, you'll rank second to the RBS one. And the problem is that these securities only call up when the seller gets some problems with debt. So there won't just be the RBS debt, there will be all sorts of other debt in the background. So all the other debt gets paid off, then they'll come, hopefully there's some left for RBS, and then you're next if you've got the second security, which in most cases will mean you're probably not getting anything.
Well, that's a good tip. So anybody who is lending out money, and if you're only offered the second charge on the property, then there is obviously a substantial risk there that you might not be left with much at the end of it. I think it's a really good point.
What about would that affect the mortgage being pulled from like RBS if the lender took a second charge? Does the first charge then get notified of the second charge, or does that not make a difference because they're below it?
No, you absolutely need to let it. So if there is or if you are going, say you're doing both, say you're doing RBS and you're doing the second charge, if there is an RBS, you will always come second. So our RBS will always want to be first. You'll just have to accept that. But they will need to be made aware that there's going to be another security granted. Some of them are okay, and again, because they rank first, so actually from their point of view, it doesn't make
Doesn't
that
make a
much of a
difference.
difference. However, you do need to let the bank know that you are going to be granting that. It kind of breaches your mortgage conditions. When you've got the security over, you're meant to let the bank know anything that you do with the property. Technically, you should be letting them know about alterations, but they're not that bothered about that. But if you're granting more lending to someone else, then yeah, you need to let them know, otherwise you're breaching your mortgage conditions.
I think it's going to be, I mean, it's already a big thing, the private lending and people with
Yep.
cash that are, investing in property through other people. But I think even more so now, because interest rates, there's talk of them going negative soon as well. Do you know what I mean? So people are like, where am I going to put my cash? So definitely something that you might see even more and more of. But yeah, we said we weren't going to get too technical. Let's roll it back to the basics, away from the charges and things. And let's just talk about you've got your offer accepted on the property. What's the next stage? Obviously, there's a bit of to and fro, and this is what kind of takes the time. What is your job then? What do you actually do for your money?
This is where we earn our money, Nick, at this point. Unless, we'll look at home reports and stuff beforehand, but once the offer is accepted, it's passed on to the seller's solicitor. What's sometimes happens is there's a bit of a waiting game at that point, because what happens is the seller's solicitor needs to actually take formal instructions from the seller and provide you with the seller's title deeds and the searches. What I did, if you're waiting a wee while, as I said earlier, I can go on to Register Scotland website and actually get a copy of a seller's title deeds if it's registered for £3.60. So I will tend to just pay the £3.60. It means I can have a look at the title deed before it's even hit me. I can also, using the home report as well, I can pretty much tell at that point what issues are going to come up. I don't even need to wait for the seller to get in contact with me. But what you'll do is, so they will eventually provide you with a formal response to the offer, which, as I said, they might mess around with the standard clauses. Again, I'll probably deal with that rather than letting the client know about that. But the response will come back with, if you haven't stated the date of entry in the offer, it will provide for what they want the date of entry to be. It will basically say, here's the title deeds, you've just to accept the title deeds as they are. It will probably, if there's any alterations, they'll say, here's the alterations. Again, you've got to satisfy yourself. So what as the solicitor does at that point is he will go through the it's called a qualified acceptance as a formal response back. We'll go through that, make sure there's nothing in there out of the ordinary. Again, if it's stuff I was saying earlier about the deleted incorporated bodies and stuff, then that's fine. We'll look through the title deeds. So you hope it's a land registered, so it's a land certificate. That's where they've gone through all the titles. A nice land certificate. It'll provide you with a plan, which will outline the property in red. What we will do is we'll always forward that plan on to the purchaser, just to make sure that incorporates with their understanding of property, especially when it's flats. You'll be amazed about how many times you get a land certificate in and someone's expecting to buy flat 1-2, but actually the land certificate says 2-2. It's amazing how often this comes up. So that's why we send it over to buy, because obviously we've not seen the property. So that gets sent to them. The land certificate will also contain, they're called burden writs, which is basically, it's the conditions attached to your ownership of the property. We'll read through them. Again, we'll send a land certificate to our client. If there's, you tend to find the burdens are all the same on it. It's like if there's communal areas, everyone splits it by all the owners. But we'll read through it and we'll let the client know if there's anything over. Like the things you're looking at, sometimes it does say it can't be used as a business. Nowadays, that's quite a big thing because everyone's working from home. So if there's anything out of the ordinary, we'll let the client know that as well. And
see, at this stage, Gerald, like one of my questions later on, but I think it'll actually fit in quite well here. At this whole stage of you kind of getting all the title deeds and really looking through stuff, is there things that can go wrong and issues that this is where the issues start sort of rearing up, and this is where you identify problems. Can you give us, I don't know, the kind of 2 or 3 examples of issues that can arise at this stage, you know? You said one
Well,
about there
one-
about
well,
the address.
The address and the plan being wrong is definitely one that can cause all sorts of issues. Other things we're provided at this point is the searches. So you get a property inquiry certificate, which talks about if the roads are adopted, not adopted, if it's connected to drainage. We also, if it's in a co-authority area, we'll also get a co-authority report. And actually, one issue that I've had just one the other day was the co-authority report actually showed that there was a disused mine shaft in next door's garden. So then you need to get it's called a mine interpretive report to see if there's any issues with that, because it could make the property unstable potentially. So that's one in the co-authority report. I've also been dealing with one within the property inquiry certificate where if it's a flat that's off the main roads and it's got an access road, that access road isn't adopted. So what you need to make sure is that your land certificate is actually providing you with a right of access to the property. So again, that's another big issue, is just making sure in circumstances that you've actually got rights of access.
And the majority of times, can you usually find solutions to this?
Yes.
Yeah.
Yeah, thankfully, yes. The good thing is most of the times there's normally a simple explanation for it. The one I was talking about with rights of access, there was it was ex-council authority houses. So this actually comes up a lot. The council didn't really think about, they thought they would own it for themselves the whole time rather than selling it off. So they've not actually thought about, when you come to now, they've not provided rights of access. But when you look at one of the older deeds, I think it was like a 1970 deed, that deed actually provided the council with a right of access to these properties. So then that goes on to whoever's buying it now. So again, it was just digging a wee bit further back. So normally you do find solutions, thankfully. And again, that's the solicitor's job, is coming up with any issues. And again, it's the main thing what you're thinking of as investors from the lending side, but when you come, the investor eventually sells it on, what questions are you going to get asked when you come to sell it, so that you're making sure you've got all the answers to the queries when you buy it. Make sure the seller solicitor answers them, so that when you eventually come to sell it on, whenever that is, if that issue is brought up when you're dealing with the sale, then you've actually got all the answers.
Yeah.
And that's probably one of our main jobs.
One of the big ones in Glasgow that you get quite a lot is in the tenement buildings. You get people who have carried out, changes to the layout, and they've maybe not got the consents and stuff like that, which could be scary for somebody who's starting out. But there's obviously things you can do there as well, isn't there?
Yeah, so there's two main things you can do about that. Option one is the seller contacts the council and gets what's known, they're known as different things, but it's mainly known as a letter of comfort. And what happens is the council comes out, they'll look at the alterations that have been carried out and hopefully just go, yes, that's absolutely fine. There's no health and safety issues. So here's your letter of comfort saying that although you didn't get the correct consents at the time, the council aren't going to raise any issues. The problem with that at the moment is trying to get the council to come out, and the timescales involved in that, it can take forever. So your other option is called a title indemnity policy, which is just basically an insurance cover. The good thing about the insurance cover is that you could get that, I could get that within half an hour. But the one thing you do need to be aware of is if you're getting a title, you probably want to do the title indemnity policy first, because if anyone has contacted the council to let them know that we've carried out these alterations and we need someone to come out, you can't get a title indemnity policy if the council have been made aware of them. If they are being told about it, then understandably insurance won't cover that risk, because insurance is just, sorry, Nick.
Sorry, that's interesting. I didn't know that. That's good. Yeah.
So, well, basically, what the insurance covers, it basically covers if at some point in the future a next door neighbour says you've done those alterations without consent, then the insurance will cover whatever comes of that as the way. So the title indemnity policy is probably the best option. But again, when you've got lending, you need to make sure that your lender accepts that as well. So again, this is where we're getting a wee bit more complex.
Sorry.
Which is fine.
We can save that for another day, maybe. We can get more technical once we cover the basics. So you've gone back and forth, right? You're in the negotiating stage, you've agreed everything. One of the big questions, right? And I still struggle with this, to be honest with you. if you're selling a property, at what point can you sort of sit back and relax and say, that's it, sold now? Because obviously you hear about things in Scotland where really the buyer and seller can really pull out at any stage up until, what's the term? Missives have been...
It's concluded. Missives are being concluded. So
missives have been concluded. So that is that's the term, that's the phrase that you need to keep a listen out for. And how quickly, like, because quite often my transactions, they seem to be like the very last week of like the transaction. So what's going on there?
Yeah, so when you submit the offer and wait for the formal response back, you're negotiating, we call them missives, but it's basically the contract that you're negotiating at that point. See, while that's still happening, either party can technically pull out without any penalties. So that's
even though you've got the acceptance from the other solicitor, this is important.
Yeah, because that is known as a qualified acceptance. So they have qualified your offer. So that is, yes, we accept your offer, but subject to the following qualifications. So that leaves it still up in the air. The good thing about the Scottish system is it doesn't happen very often at this stage when people pull out. And the main thing that delays the conclusion of missives is when there's a mortgage offer. So when you've got your qualified acceptance in, I can't tie in the purchaser until we've actually got our offer of loan in. Because even though if you've got a mortgage offer accepts in principle, that is just an offer in principle until we've actually got something in writing. So the purchaser will get their version and the solicitors get their version. We can't tie in the purchaser until we've got that in, because up until that point, the mortgage could be pulled, and especially nowadays with what's going on. So that's the main reason for delays is mortgage offer. But then as soon as you've got your offer of loan in, then there's nothing really stopping you going back to that qualified acceptance. You do a formal acceptance, that qualified acceptance, which hopefully they come back and we'll just conclude on. And it is at that point, once you've got conclusive misses, that you could technically just go back and say, yes, that's good, because at that point, both parties are tied in and you can't pull out. And if anyone does, then you're breach of contract and there's all sorts of issues with that. So that's the bit. And that's why you tend to find that it varies. Again, if it's cash, you can tie your client in quite quickly, but if it's a mortgage, then you've got to wait until the mortgage offer is in. You can't tie your client in. So that's why it can take bits of time, a wee bit longer.
And is that when you would be invited to like sign the mortgage documents and all that? Like,
well, yeah. Nowadays you don't really have to. You're not signing very much.
No.
What a lot of clients get, and again, I'll kind of go back between cash and mortgage. See, if you're a cash buyer, you will sign nothing in that. So we as solicitors will sign the contract on your behalf. There is no security for you to sign. So in that circumstance, and a lot of clients get a bit worried about it, but there's nothing for you to sign. The only thing you have to sign would be if there is a mortgage and there's a security. Nowadays, you can do electronic signatures, but what we actually do is when we set up someone as a client, we get them to grant us a power of attorney so that we sign on their behalf. So it's a document which says, say it was Nick, you were doing it, or Stephen was doing it, you give me permission to sign documents on behalf of you guys in relation to buying a property, which means I can sign the security for you on your behalf. So again, you don't have, but again, we wouldn't do that until you're tied into the contract. It just makes it a lot easier. Well, you can't really get clients in.
A lot smoother, yeah.
Yeah, and you can do electronic signatures, you can do all sorts of, and if being honest, this is the way it should have been before. It shouldn't have taken a worldwide pandemic for us to come into the 21st century with electronic signatures and signing on behalf of clients.
Solicitors have always got a bit of a bad rap, haven't they, for being stuck in the dark ages and fax machines and stuff like that. Are you still using faxes?
Nope, not anymore. But
they use pigeons, most of them.
Pigeons, there has been pigeons. I think there might be one being sent to my house at the moment, actually. But what you find is, especially, and this is, I think, a good question is when you're looking for solicitors, not just to act on your behalf, but actually on behalf of the seller, you do want to get solicitors who have dealt with investors before, who are doing electronic signatures. Unfortunately, there's still quite a lot of solicitors who don't. But if you get a solicitor that can act for you who's quite up to date with how investors work and their choices, and the seller solicitors on the same wavelength, then it makes the whole system go through much smoother as well.
The other one you get quite often is the lunch break. We're closed for lunch.
Well, I actually had a funny one on
2 hours.
Friday. I had a funny one where quite a well-known solicitor's firm apparently closed on Friday afternoon, which is an interesting one.
Say that again.
When most transactions conclude.
Yes, on Friday afternoon.
Oh, right, they close. Right, okay.
Close on a Friday afternoon, close early on a Friday afternoon. Which, and this is kind of one of I find quite funny is when you speak to solicitors and they say Friday is the most chaotic day for us. Now, see if you've got multiple transactions, then yeah, I understand that. If you've got like 10, 20 that day, then yes. But everything should be technically done for Friday. And again, we might get this onto further, and I might have jumped ahead when we talk about settlement and stuff. But
no, that's all right. Just bring it on to that anyway. That's fine. Yeah. So we're at the day. We're at the day of you're hoping to get your keys. What happens?
Yeah. So as I was saying, everything should be set up for that. All the issues should be sorted. You should be tied into the contract. Even it shouldn't be on the day of settlement. You should try at least the day before settlement be tied in. But you're right. There is sometimes circumstances where it is on the day. If there is a mortgage, we will, and the vast majority of solicitors will actually ask for the loan funds the day before settlement. So they're just sitting in your account. You will also, whatever the deposit is for any of the fees and outlays, your LBTT, we will always ask for that at the latest the day before settlement. So you've got all the funds in your account. And what we actually do is if all that money's there, we will actually instruct a transfer on the Thursday so that it's with the seller solicitor on the Thursday. We call it to be held as undelivered. So even though it's in their account, it's held to our order. So that first thing Friday morning, you should hopefully be getting the keys because you've done all the transfers. You've got all the, this is obviously in a perfect world and your ideal 2 weeks cash buyers, nice and easy. Everything.
And there's no chain.
There's no chain or anything like that. The chains are turning out at the moment are an absolute nightmare. The chains. So again, I'm talking about if it's a nice, there's no chain, it's cash. Well, even if it's mortgage, you should have that before. But if there's no chain, then there shouldn't really be any of this waiting until 4 or 5 o'clock in the afternoon with your removal van sitting there waiting for the keys. But as Nick rightly says, if there's chains, then that can cause all sorts of. And what I'm finding is the chains are getting longer and longer.
What happened? We just sold our house, our personal house last year, and everyone's there was like 4 people in the chain, So like I was actually in the loft still clearing out boxes down from the loft because I forgot that I'd stored about 20 boxes up in the loft when the guy who was buying our house arrived at the door with his removal van. So I was like, hey mate, just start pulling stuff in, it's fine, I'll just get rid of the last of these boxes. So it was like literally like we were going out and he was coming in. It was mental.
And that's one of the main reasons we try and set up, like especially mortgage funds and the deposit is the day before, because when you've got the chain, the problem is that it's all the transfers that goes on that day. So you've got the first sale has to wait till the money comes in, then there's a chain reaction of bank transfers. So if you can get your loan funds in the day before, that takes one out. Thankfully,
it could be quick like that.
Quick like that. Yes.
Right. Let's
so
talk
about solicitors
asked
for the settlement date to be on the Friday. Is there a reason for it, a rhyme and reason, or can it be any day?
Now it can be absolutely any day, Stephen. And I have had fights with people about if it needs to be Friday, but why does it need to be Friday? Well, just because it needs to be. Now, the main reason, actually, there's a reason for Friday where Nick's talking about the chain and stuff. People like the weekend. So you get the keys on the Friday, you got the weekend to move in. But see, when it's investors, it can be any day. And especially if the property is lying
any day of the week,
It can any day, apart from Saturday or Sunday, because now that's not because there is plenty of solicitors, as you know, will work on a Saturday, but the banks, you can't do transfers on a Saturday and Sunday. So any weekday you could, whatever day it should be, it could be any day, as I said, but I've had fights with other solicitors about trying to make it the Monday just because that's what they're used to.
Yeah, I was laughing when you were talking about that because I was completing on the Thursday last week and I pushed it for the Thursday and I was still up in Aberdeen at 5:05 and the estate agency was closing at 5:15 and if I didn't get the keys by then, if the transfers weren't complete, I was pretty much a wasted day up in Aberdeen to drive back the next day, go and collect the keys. I was like, come on, like why is this not done in time? I tried to push it to the Thursday to try and avoid that Friday madness, but still was the same.
It's still the same, and I've come across that before as well, where we have pulled it forward, but unfortunately for whatever reason it's gone on to the 4:30, 5 o'clock, and the estate agent will say, I'm not staying any longer. If it's not done by 5, I'm off home.
You must be tearing your hair out sometimes, because obviously you can only go as fast as the other party. So like, you know, sometimes it's out with your control. So if you're dealing with a solicitor that's still stuck in the dark ages or not returning your calls or whatever, it must be a total nightmare.
It is a total nightmare, and the problem is I'm probably oversimplifying it, and I'm kind of giving solicitors, I mean, the work we do is quite complex and stuff, but it should, especially with investors, it should be relatively straightforward and simple. That's even if it's cash or mortgage, it should be straightforward. But the amount of issues we have because of potentially of our solicitors, estate agents and stuff, if everyone just, there's plenty of work for everyone. And I think as solicitors, we should be helping each other as solicitors as well, getting, rather than why are we making it more complex? Why are we fighting over incorporated bodies clauses and crofting clauses? There's just no need for it. We should be making it, and if the solicitors make it easy for each other, then that passes on to the clients as well, because we're saying, oh yeah, we're hearing from the other side a lot, everything's on track, rather than saying, oh, I can't get hold of the other solicitor. Because as soon as you start telling your client that, understandably they start to panic about what's going on. And that is our main job, is to make it a stress-free transaction for the clients. And unfortunately, as some solicitors, we don't
What
really
about the introduction of what about the introduction of the kind of the lender solicitor now then, from limited companies' point of view?
It definitely makes it more complex from our point of view, because it's another solicitor you're involving.
And one for your personal guarantees as well, is that right?
And one for your personal guarantees as well. And unfortunately, the more solicitors you get involved, the more complex it gets. You don't want to be, but as you say, some lenders insist on using their own solicitors. There's some lenders who will insist that firms have to have, I think the most I've heard is like 5 partners, which I don't really get. But if you come across that, I can't, our firm doesn't have that many partners, so we can't get onto that panel. And then you have to get us, so I can still act. So say
that's to be on the panel of lenders like Aldermore and Precise and Shawbrook and the kind of
so it's kind of away from your RBS ones. They'll insist on it needs to be a certain amount of part. That's a main one you come across, and if you don't have that many partners, you don't get on their panel. And then what happens is they'll insist on their solicitor acts on the security side of things. And that makes it harder from a solicitor, because not only am I doing my own checks for myself, but then I have to forward usually the title deeds, the searches onto the bank solicitor. They'll do their own checks. They'll get back to me with any observations that they have. So it makes my job harder as well. Again, it shouldn't make the clients any more difficult, I would say. It's more for a solicitor, but it does mean things take longer because you've got another solicitor involved.
Cool. Talk to me about fees. How much is this going to cost me then? Like if I want to buy a property here in Scotland, like
fee wise, you will vary from I've heard as cheap as this is just in relation to legal fees, as cheap as £300 up to it could be anything as cheap as £1,000 possibly.
So obviously you get what you pay for. So I would be very careful if you're only paying £300. I've heard these quotes as well through some of these internet, legal sites and stuff like that.
There's like compare the market. You can go on that and you'll get that. So some solicitors actually just quote that if you go to them direct. My advice would be, if it's £300, I would say there's a reason why it's £300. And also you have to think about, for them to make I don't see how a firm can make a profit on charging £300 for it. So they have to have I was lots and lots of transactions going through to make it profitable for them. So do they have enough time to deal with it properly? I would say you want to be going, someone who's experienced, especially you want to go with someone who has experience of dealing with investors, because it's different dealing with investors than other kind of your first time buyer or your second time buyer. I would say a reasonable, I would charge around £600-700 ish.
I think, well, yeah, I think by the time you add on, so you've got that basic, you've got that conveyancing fee, right, which is the £600-700, but then obviously there's other things that pop up in your statement, because sometimes if you're starting out, you're like, the solicitor said they're only going to charge me £600, and then you end up at like £1,000, and you're like, what's all the rest of this stuff for?
So I would say overall, including your fees, your VAT, and the outlays, of about £1,000 is actually about right. So on top of your fee, which will be plus VAT, there is, we call them outlays. So your main ones that you will have is, so the registration of the disposition. So the disposition is the deed that actually transfers legal ownership to the new owner. It's based on what the purchase price is, and those are set by Registers of Scotland. So you start off, if it's 0 to 50,000, the registration fee is £70. If it's over 50 to 100,000, it's 130. If it's over 100,000 to 150, it's 250. And as you see, it just keeps on going up and up. They're set by Register Scotland, so that's just whatever bracket you're in, that's where you fall in. You can go into Register Scotland website, and that's all provided. If there is a mortgage, you'll have a registration dues for your security. Thankfully, that's just set at £70. It doesn't matter what your purchase price is, that doesn't vary. You've got another thing called an advance notice. Now, I could talk to you a lot about that, but I'm not going to. Basically, it needs to be done. It kind of, it sounds daft, it secures the security. It's just something you need to do. It's £20. So you just have to accept it's £20 for that. That's your main ones. Then you've got your LBTT fees as well, which...
Just for people that don't know, LBTT, Land Building Transaction Tax.
Yep, and it's the old stamp duty. A lot of people still call it stamp duty. It's because it's a first evolved tax to Scotland. So it's called stamp duty in England, but it's now, we call it LBTT. And I think the main thing from investors are, if you own other property, or if you're buying in a company, you're getting done for 4%. It's called the additional dwelling house supplement. Yeah. And it's just a standard, unless it's under 40,000.
I like how you said we're getting done as well.
Well, again, that's maybe another conversation, I think, about. I don't want to get into the system and what I think should happen. I just think if you're paying 500,000 or something for a property, then I kind of get the tax, and you should be taxed on that. But when you're paying, say, 41,000 on it. But anyway, you're stuck with 4% on top of that, and it's
that's the bit that a lot of people forget about, to be honest with you. And it really, really is important. Myself and Stephen talk about this all the time. Make sure you have that in your spreadsheet for doing your numbers if it's an investment.
Yeah, and because the one thing I always get asked is, what price should I be offering? I can't really tell you what price is. I can certainly advise you, if there's loads of people interested in the property, it's definitely going to go for above home report value. It'll definitely go, there's no doubt. If it goes to a closing date, and depending on some years, but most years you can talk 20, 30, 40. I mean, I've even heard 70, 80 above home report.
Yeah, I mean, let's just talk about that. Current market. Obviously, we're in, what date are we? The 2nd of March here. We're still in the lockdown, coming out soon, hopefully. But the property market is opening. And although there's a lot of doom and gloom, property market's certainly still roaring and things are going for crazy prices. So what's your experience been? And what about this, we're coming to the end of the stamp duty freeze holiday, which is at the end of March. Has that made a difference in Scotland? Because
it's mental, Nick, as you know, it is just absolutely crazy. There's all these incentives that are making it for your first time buyers, and it's making it not impossible, but very, very difficult for investors at the moment. And you kind of go back to the price when I get asked, what investors have to do is do your numbers. And as we were saying, that has to include that 4% LBTT and stick where it's profitable, stick to that figure. As long as it's not absolutely ridiculously low, you put that in, but if it doesn't get accepted, just move on to something else. I was kind of, because I act for investors, and I was slightly hoping that the market might kind of move towards investors when we got to the end of March with things ending. But certainly I'll be watching tomorrow's announcements.
Yeah.
Because certainly, I mean, it's all up in the air and it's all reports and stuff, but certainly it seems to be that this LBTT, SDLT, whatever you want to call it, holiday extension is going to be extended till the end of June, is what they're saying.
But that's England, right? So in Scotland, we've got different rules.
Nick, I'd be absolutely shocked if that's announced in England, but we don't follow suit up here.
Yeah,
I think there would be a
national uproar. But
I mean, obviously the figures are completely different because in England the exemption is right up to 500,000.
And it's a huge difference because if somebody's buying at £500,000, they can potentially save
it's a 16,000. It's an absolute, and that's why they've got to this stage, because it's so good. It's such a big incentive down in England. That's why everyone is up in arms about, well, my mortgage offer is taking so long to get. I've requested it December, January, but it's still not in, so I'm not going to complete by the end of March. Yeah. So that's why there's so much pressure for.
But in Scotland, right? You're only saving between 145 and 250.
It works out 2,100, I think. It's around 2,000.
That's the maximum you can save.
That's the maximum you can save up in Scotland. Is because, as you were saying, Nick, sorry I interrupted, is that before this holiday came in, the bracket was anything between 145,000 and 250, you were charged 2% on that bracket. And basically they got rid of that bracket, so you're not charged any tax. Again, this is if you don't own any other property. You do not charge any LBTT up to 250,000. And when you break it down, it's, as you say, Nick, it's around £2,000 up here. But what you're finding is for a first-time buyer, that's quite a bit of their deposit and stuff. And that's why, and I think it's not that much, but to certain people that really is, and that's what's driving the market as well. And if that is extended to June, and again, we don't know if it's going to be, it's only extended to June if you're in the process of it. So if you're in the conveyancing process, or whether it will just be, again, it's a free-for-all, and it's just, you get up to the end of June. Again, we need to see if there's going to be any restrictions to it. And
it's definitely causing more competition for investors. But I mean, it's important to say that really, the 4%, that's not been frozen. So we still need to pay the 4%. And my investments anyway are generally underneath 100,000. So it doesn't really make a huge difference anyway. But it still creates that buzz.
It doesn't affect investors direct, I would say, in terms of figures or anything, but it's definitely, as you say, for competition wise, it definitely does. And if these things are extended, we're looking at, if it is the end of June, then you just don't see any slowdown happening anytime soon.
I don't think so. What about the crazy offers that people are putting in at the moment and closing dates and all the rest of it? What are you seeing and hearing?
It's nuts, Nick. Absolutely. I'm old enough to live through the last recession that we had, and even pre-recession. I know what the numbers were like before then. I would say some of the numbers I've seen is even more ridiculous than pre-2008. It's absolutely insane what people are offering. And I can, thankfully I've not had one of my clients actually go that insane, but we as solicitors can advise, by the way, that is absolutely, and your mortgage, the problem is there will be interest rates increase, although they're talking about negative at some point. We might go negative interest rates at some point. We've got to pay for all these incentives that have been going on for the last year. So at some point, interest rates will increase. So I would say I can't, because I'm not a mortgage advisor.
And if you've paid 30-40 grand over the value of the property, and then potentially the interest rate rises, you could fall into negative equity, you might not be able to remortgage, It's an absolute recipe for disaster.
It's almost as if we've not. Well, the lesson we've learned from 2008 is the banks have learned their lessons about it. But what unfortunately people haven't really remembered going and don't realise, as you say, Nick, what even a 0.5% increase will mean to their mortgage, and you've paid the 30-40 deposit and stuff. So it might be a while before this kicks in, but again, at some point, a lot of people are going to end up in negative equity, but no one seems to be really thinking about this sort of stuff.
But then there's talking negative interest rates, so who knows?
That's the thing, and that's why in the short term it's going to be very, very buoyant. But a lot of people, unfortunately, are not thinking long term, because yes, if we go to negative, that's fine, but there's no way they can keep that. As I said, that the government, both Scotland and UK, are spending a lot of money over the last year. And that money has to be made back.
We should say here, I'm looking at Stephen's face because he loves it when I say there's no deals. There's no deals. Everyone's going crazy. Right, this is important. We should say that this is only really, we're talking about Glasgow and Edinburgh, Central Belt. Stephen, you've got a different story, mate.
Well, Aberdeen's always been its own weird little haven, hasn't it, Stephen?
Yeah, absolutely. I found the deal in Fife last week as well. So there's deals there. They're just kind of few and far between at the moment because people are.
And Ayrshire.
Yeah, Ayrshire. Yeah. Well, yep. And again, Paisley was where I was telling a couple of years ago. Clients have a look at it now. That's people are seeing insane numbers there. Again, if people are looking at Glasgow, your West End kind of surrounding areas, then it's going to be very, very hard to find deals. But if you spread out further afield, and absolutely, as well, what unfortunately you're finding is if it's still a commute within Glasgow, you're finding more people want to move out from the city centre as well. So you're finding that's having an impact. But it's hard to find deals, but there is deals. There's definitely deals out there. It's not like Nick says, there is no deals out there, but there is. It's harder. It is absolutely harder to find. But as I said, if you've got a relationship with estate agents, they'll come to you with properties. Yeah,
and that's what you. So if you've been one of the lucky ones to find a deal and you need to get a solicitor to act for you, where can people find you?
Well, so you can get me on Twitter. I'm on LinkedIn as well. Am I allowed to do my phone number and stuff, an email address?
Do whatever you want.
Go for it. Fine. So my email address is now, it's gerald.segal, which is Segal, at MOV8, so MOV, the number 8, realestate.com. There you go, a bit of a tongue twister. And then my direct number is 0141. Now I'm not learning it off by heart yet. So 0141 473 8468.
Great.
And I'm on LinkedIn, I'm on Twitter. You can find me the usual.
You're a very well connected guy. So we look forward to you publicising the Scottish Property Podcast all over your social media to get us loads of more listeners.
Absolutely, Nick. No problem at all. I'll send you my commission through by pigeon.
Brilliant. Thanks very much for joining us, Gerald. So I hope you guys enjoyed that interview. I know I certainly did. Like I said, it's stuff that you should certainly know, but I'm pretty bad for glossing over it. So Gerald explained it in layman's terms, which is good. If you guys are on Instagram, feel free to follow the new Scottish Property Podcast Instagram page. It's now live and we're posting up each episode weekly as they're released.
There's a way that you can gain more followers as well. You can basically take a screenshot of the podcast. If you tag in at Scottish Property Podcast, and myself and Stephen, we will put it on our stories and you'll find that you gain a few more followers as well. So we're happy to do that. And if you've got time, please head over to Apple Podcasts and leave a review. Thanks very much for your support as always, guys, and we'll see you in the next episode.